It is 8 p.m. September 18th, 2017. It is 8 p.m., as I said, Pacific Standard Time, and so you know what time it is. It's time for Coin Metal. My apologies, I'm off today, man. We did not get our asses kicked at Jiu-Jitsu today because, well, you know, I figured something out. And it took me a little while to figure it out. And I feel kind of dense for not noticing it sooner. But, yeah, I'm very excited about going in to do Jiu-Jitsu, right? And so being able to line it up with my Coin Metal schedule of Monday, Wednesday, Friday, it just worked out. It was perfect, right? The problem is that the Monday class is actually Jiu-Jitsu 2, not Jiu-Jitsu 1. And, I mean, I am kind of advanced for my class, but I'm not that advanced. Not that much more advanced. And I had trouble figuring it out before that, like, every time I did get injured that wasn't during the open mat time was happening on Mondays. And it's because those guys go that much harder. And I was like, oh, fuck. That's what it is. And so it's like, and the other thing that came up to mind was that there were guys in there that were having to tone down their approach when they were rolling with me and training with me because, you know, I'm not quite there yet, right? You know, they do certain things, you know, like heel hooks and shit like that, you know, as a white belt, I'm just not familiarized with yet, right? And so, and they go a little more intense, a little harder. It's because you're supposed to be used to it by then, right? You know, you're ready to advance up to Jiu-Jitsu 2. You can take being dropped on your ass and you know, ripped around the ground a little bit. Well, like I said, it's a little bit too intense for me at the moment. But I will work to it. You know, maybe after I get my blue belt, I'll be working up to Jiu-Jitsu 2. You know, but I never seen any other white belts in the class. You know, I was always the only white belt in there. So, you know, I was just kind of, you know, putting things together. You know, it seemed to work for my schedule, and so I just went with it. You know, what the hell. Anyway, yeah. So we're here, and so we're getting ready for our first dance, and so far it looks like my connections and everything is actually working today. I mean, dude, today was just horrible. The internet was horrible. The rain was constant and very, very hard. I will say this, so I'm very proud of their greenhouse Mark II, as it did weather the storm fabulously. So I'm looking forward to just doing things to try and mitigate some of the leaks that I still have in the roof, which I did some of today, but I can still go farther toward that end. And then I want to really get serious about trying to move the water around the greenhouse as opposed to running through the greenhouse, because it's not good getting too much water in there, you know. Anyway, let's go ahead and throw down our first dance, and of course I still haven't had anything picked out yet. And you know what, fuck it, it's Monday. The Beautiful People by Marilyn Manson here on Coin Metal. And that was Slayer with Bitter Peace. And yet another day, and what does it seem that people are talking about? Jamie Dimon and the fall of the price of Bitcoin. Never mind that it's been back up to $4,000 since, but, you know, who's counting, right? Yep, the coin goes up, the coin goes down. Nobody explains. Nobody knows the reality. Anyway, so yeah, it seems like everybody's still talking about this monkey. It's like one guy on the entire planet manages to get a phone call from the PBoC letting him know that there's going to be a good opportunity for a low price on Bitcoin, makes a big deal about it in front of the media, and suddenly, you know, he's Mr. Prognosticator Extraordinaire. He hasn't had anything really good to say about cryptocurrencies until relatively recently, when he kind of hinted that despite the fact that it is all a Ponzi scheme and it's meant to collapse and it's going to take all your money and all that other shit, it could still go up to $100,000. Hey, come on now. That's like double-edging that sword, you know? But anyway, I see that the rumors that I was talking about last week about JP Morgan actually trading the coin, it turns out that they're actually true. I actually looked it was like some transaction chart, and it showed it definitively that it was like JPM something. It was like one of their subsidiaries or whatever, but we talked about it a lot on Friday. And there was something else I wanted to talk about. God damn it. You know, I've been having a lot of computer issues. I mean, like, a lot. You know, this last weekend was gameless for me. Just because between my system issues, my network issues, and it's funny, I'd read an article on here a while back about hackers using printer ports or printers as access points for home networks, home and office networks. And I'm like, I wonder if that could be happening, because my bandwidth is like really, really, really low. And I don't know definitively that there was a 100% connection to it, because I was having some other network issues too, and since seemed to have resolved those. Anyway, so I turned the printer off. Actually, I didn't turn it off. I unplugged the fucking thing from both the wall and the computer. And lo and behold, my network suddenly came back. It's like, I just picked up about 30% of my bandwidth again. Wonder what was going on there. But it seemed like I had some residual shit going on, and I managed to resolve probably all of it now. I'll probably go through and check and verify a little bit later on, but so far it seems like everything that was having an issue is kind of normalizing now. So I gotta think I'm on the right track with regard to system repairs and all that other stuff. Anywho, I do want to get into some articles, and it seems like there's some interesting stuff going on with regard to Verge. Got the Wraith protocol coming up, and I guess there's some sort of release announcement that I saw on here. Unfortunately, I don't actually have a tab open with it, but I did read it a little bit earlier. And man, I had so many tabs open in here. It's kind of hard to figure out exactly where I wanted to go with this. Oh, gosh. You know, I saw this, and you may have seen other celebrities getting into cryptocurrencies. As a matter of fact, I believe I recall a Kanye at one point. Yeah, there's always been this interesting attempt to connect cryptocurrencies with celebrities of a wide variety, and yeah, like I said, Kanye, and then there was somebody else. Paris Hilton was saying she was going to get into some sort of ICO, and I got one right here in front of me. This is CoinDesk. Actor Jamie Foxx promotes crypto exchange ICO. Oh, wait. I got something here. I had to check something out right now. Oh, wait. Wait. Anyway, hopefully he wasn't talking about this article here. I had to check on something. I'm going to check and verify here. Because the man is talking about something else, I think, here. Reading your paper. Alright. And somebody else was talking into here. Alright, Frank, I swear to God, I'll probably win. Wait, what? Whoa. Yeah, apparently there's been some sort of disconnect between what I was going to read and what I am reading. And some people were a little bit concerned. I talked just a teeny tiny about the Wraith protocol. And there should be some sort of announcement at some time in the future about that, but it's not quite there yet. Anyway, so, and if you've been watching your Twitter feed, I'm not giving you any spoilers by the little subtle hints here about what I'm talking about. You know, there's no spoilers here. When you watch your Twitter feed, you've seen shit about the Wraith protocol, so I don't even want to hear it from anybody. I'm not going to go into depth because I myself am still in the dark. I'm not part of the intimate, detailed part of the team here. And so when it comes to sharing intimate details with me, I'm sure they will. And then we'll go on from there. Anyway, back to this thing. This is actor Jamie Foxx promotes crypto exchange ICO. And this is written by Mr. Stan Higgins, September 18th, 2017. And, I don't know why they bothered to announce these, really, because, honestly, I'm not really impressed that it's Jamie Foxx. I mean, to me, they could have told me the guy that lives, like, three houses down is promoting a crypto exchange ICO. And because he was newly inducted into crypto recently, I would be happy for him. Just on that. So Jamie Foxx, good on you for discovering cryptocurrencies. Otherwise, I could really give a fuck about your involvement with this ICO. Anyway, continuing. Yet another celebrity has entered the cryptocurrency promotion fray. And with Academy Award winner Jamie Foxx promoting an upcoming initial coin offering. In a post on Twitter, Foxx promoted the coin sale for Robinhood, which is being advertised as a zero-fee cryptocurrency exchange. That sale is currently underway according to its website, netting 17,840 Ether, worth roughly $5.1 million at press time to date. Looking forward to participating in the new Robinhood token, zero-fee trading, cryptocurrency, Bitcoin, Ethereum, blah, 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 Jamie Foxx. Now that's amazing. Mr. Jamie Foxx getting into the crypto gig. Good for you, man. Anyway, continuing. The promotion suggests that the spate of celebrity endorsements for cryptocurrency-related projects isn't slowing down anytime soon. As previously reported, celebrities such as Floyd Mayweather Jr., socialite Paris Hilton, and rap artist The Game have promoted upcoming or now completed token sales. To date, more than $1.8 billion has been raised through the funding model, according to date from CoinDesk's ICO tracker. Yeah, again, do not care that he's got a name. Good for him. It sounds interesting. Let's check out the project, though. I think that's the more important stuff. You know, it's like, what does Robinhood do? I give a fuck that Jamie Foxx bought into it. I mean, because for all I know, he's going to get ripped off. You know, a lot of scam maliciousness in that ICO business. At least that's what I've been reading. Now, to be fair, that's been said about cryptocurrencies from the beginning, is that we're all a bunch of fucking pedophiles and drug dealers and all that other business. That's just not true. So, whether or not all ICOs are scams, I leave that to the ICO. It's something like altcoins. You know, when altcoins would come out, you give them a week or two, you know? You see how they work on the exchange, and if all you see is that huge spike in the beginning, and then like a huge tank shortly thereafter, and then just flatline for about a week or so, you know it's dead. The person got their fucking pump and dump money and walked. So, you know, I expect we're going to be seeing the same thing with regard to ICOs. That, you know, just because they're backed on Ethereum, I don't care. It's like getting the money from that initial pump and dump, before you actually produce any code. Because a lot of these projects, and that was a big indicator to me, was that a lot of these projects, the ICOs, all they got is like presentation materials. You know, they don't really have, you know, technical stuff. Anyway, so I'm on Robinhood's website, and let's see here, news. I don't know. I guess we'll try these guys. These are the advisors on it. No. My apologies. I haven't actually reviewed this webpage, and it usually turns out that the better looking the presentation, the worse a scam it is. I mean, but that's just my general experience with cryptocurrencies. Yeah, we could do news, I guess. But I want a white paper, man. Give me a fucking white paper. I can read through like their features or something like that. You guys join our blah 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 blah. Yeah, zero trading fee cryptocurrency exchange. Zero trading blah blah. Robinhood is the world's first, quote, zero trading fees cryptocurrency exchange with the vision to maximize traders' profits. Whoa. Traders can now enjoy zero trading fees for spot trading and margin trading for up to 10x leverage. Holy shit. These guys must have a shit ton of money already. Let's see. Secured crypto asset deposits. Robinhood stores the vast majority of the crypto asset deposits in an offline multi-sig vault, which requires 5 out of 8 geo-distributed hardware security modules to open. Furthermore, crypto assets stored in online wallets will be backed up by insurance. Yeah. These guys probably have a shit ton of money. They probably got bankers falling out of their ass. High performance order matching engine. Robinhood's proprietary order matching engine can process millions of orders with sub-millisecond latency. Woo! The whole system is designed to be fully distributed, highly available, and auto-scalable, achieving true real-time trading experience for traders around the globe. Wow. Sounds like hot stuff. ICO underwriting service. Robinhood positions itself as a global authoritative ICO underwriter, i.e. Crypto Goldman Sachs, providing ICO due diligence, smart contract code review, and legal compliance review for ICOs with the vision to build a trusty ICO ecosystem. You know, I could swear I heard the same thing about some sort of altcoin project or another. Wide range of fiat currencies supported. Robinhood will support all mainstream fiat currencies: U.S. dollars, euros, Japanese yen. Wow. Robinhood's website and app will support 10 major languages, covering 98% of the world's population. Holy crap. Yeah. I wouldn't put my money with these guys. I could be wrong. It's really oh shit, never mind. They got VIP, they got like structured trading and shit. Token privileges. Wow. Interesting. And let's see here. Their roadmap. Robinhood development starts. Robinhood ICO launches. And sometime in September of 2017. Then in November, cryptocurrency exchange platform online. 2 months. That's not too terribly ambitious. Let's see. In December 2017, margin trading, funding, and fiat trading online. Let's see. Q1 of 2018, ICO underwriting service online. Let's see here. You know what? I gotta tell you, if you need somebody else to underwrite your ICO, you shouldn't be doing an ICO. I think that's... Oh, wait. Oh, I knew it! Oh, God, these guys are killing me. Okay, so looking at the roadmap here, quarter 2 of 2018, decentralized exchange online. Okay, now see, they plan to have fiat trading by December, and also margin trading and funding. Okay, by Q3 of 2018, get this. This is where it all gets interesting. Crypto assets trading with stocks, foreign exchange, precious metals, commodities, market index futures. Oh gosh, that's so ambitious. And because the thing is this, I need to read their white paper. I mean, do they have a white paper? Robinhood team, general, add some articles to this collection. What the okay. These guys are a scam. Sorry. But I if they deliver, I will be really surprised. Sorry, Jamie. Hope you're able to cash out in time. Let's see here. We're going to try their top 5 most asked questions. Collections, organize your articles so people can find them more easily. How to see COB tokens in my wallet. Know the token address and then apply it in your wallet. How do I participate in the Robinhood ICO? Getting started with Robinhood ICO. Just copy the address from the official Robinhood website and check the URL. If it's HTTP, blah blah, this is a must. You can proceed to Ethereum using your MetaMask, my Ether wallet, blah blah blah. Send us Ether. Yeah. Yeah, I think these guys are a scam. Blah 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 blah. Let's see. Are certain people excluded? Okay, so unable to accept participation from citizens of the United States of America, Canada, China, and Taiwan due to existing regulations in their respective states. Yeah, these guys are a scam. Sorry, Jamie. Gonna lose all your money. You know, I don't count licensure or any of that, or regulation compliance or any of that. I don't count that shit as a mark of goodness for a cryptocurrency. So number one, the fact that they would even bother noticing on this, the people that are involving themselves should know better. You know, meaning that, like Jamie Foxx, he should know that as a United States citizen, he can't actually participate in that. I mean, because our regulations, I guarantee you this thing wouldn't pass their smell test. And, you know, we're talking about the SEC. They let Goldman Sachs stay in business. So, you know, that doesn't do anything for their credibility, I gotta tell you. Well, so yeah, I think that, I think he's going to lose his money on COVID. What they're offering, it sounds really interesting. Zero fee cryptocurrency exchange. Whether or not they can actually manage that, I don't think so. And I don't know that I trust them, honestly. I certainly don't. I wouldn't trust them with my money. I'll just say that. So yeah, Jamie, I hope you haven't given them any money. I hope you're just talking about them because I'm pretty sure that they're scammy. Later, see ya, goodbye, blah blah blah. Launches, Coben Hood. Yeah. Anyway, enough of that business. Let's go ahead and throw in a little bit of music here. And I haven't had an opportunity to really listen through the entirety of this 6th album, so I'm not sure which ones are spoken word parts. I mean, I've listened through it a couple times, but I haven't memorized which ones are songs and which ones are spoken word. So I got to assume that the shortest ones are probably spoken word. And so I don't know. I definitely want to play more of it, but I don't want to bore you guys with the spoken word stuff. Fuck it. No Wishbones. 6th here on Coin Metal. And as we all know, there is no out when it comes to cryptocurrencies. That was Slayer with Dead Skin Mask. Anywho, back to some articles. I did some mining around. That's one of the reasons why I actually do music breaks, is because I do freeball this. It gives me just a little bit of an opportunity to look for media to talk about. Anyway, so as we were saying previously, Jamie Foxx, you're probably going to lose your money. I don't know that I would trust an altcoin with those kinds of credentials. I think that in the longer term, also, I think that decentralized exchanges that don't necessarily have to be at any one place at any one time, I think those are probably going to become a bit more popular in the near term. See, we're going through a phase, I think, that where the idea of it reminds me a lot of the Hillary election. The last election where Trump won. According to all of the media and all that other bullshit, she was just supposed to win, right? And just like that, in cryptocurrencies, we were all supposed to be, we were all supposed to just accept segregated witness and just do that. But as we've seen from the miners, that hasn't really been the case. And so the assumption, that just because we can plan a certain thing happening doesn't necessarily mean that it's actually going to come to fruition as planned, And I think in the longer term, or in the short term rather, we're going to see this push with like the Chinese. Okay, and this big push for regulation, it's not lost on me that it's happening just this side of segregated witness. Is it lost on you that that's the case? And by the way, I'm still getting SegWit cheerleaders blocking me on Twitter. I think that's hilarious, considering where we're at with this, with regard to this conversation. There's this impression that if you just ignore the fact that there are miners out there that don't want anything to do with segregated witness but want to stay on mining Bitcoin, that after a while they'll just go away. They just went away with all the other altcoins that you did that too, right? Where you just changed the code and you bumped everybody that was running the old code as basically spam. And just assumed victory, right? Well, you can do that when you've only got a couple hundred miners, maybe, globally. But you can't really do that with Bitcoin because we have, like, entire hashing farms worth of miners that dedicate their hashing power as they will. And that's, I don't suspect that's going to change anytime soon. And where it does change, I think that it will see a reciprocal change somewhere else. So this whole idea that, everything was supposed to go wonderfully for segregated witness, I still fail to see that it has. I mean, there are probably some more segregated witness transactions going on out there. But it wasn't one of these just like slam dunk kind of things, and I don't really expect it will be. I mean, maybe like a slow migration. Like I said about the one placard that stuck out to me that I saw on covered by the people that were actually attending Breaking Bitcoin. There's this chart. It had like 8 or 9 different variants of Bitcoin. They all had their own little sub values. And then, like, the total value of the Bitcoin was like $7,000 or some shit like that. But the idea being that they just want to continue to fork until they have all these little sublets, and that's supposed to get them what they want, to where they just break off everybody that doesn't want to do what they want to do, that they manage to finagle into going with some particular spice or flavor of Bitcoin that isn't quite what you had, but is more like what they wanted you to have to begin with. And, you may or may not decide to adopt it. But I think that they depend on you doing that, you adopting. So, with regard to 2x, I'd really like to see all of the people that were going to support 2x just support Bitcoin Cash. But that's just me. There might be things in Bitcoin Cash that I'm unaware of that they aren't fans of. So, we'll see. Anyway, we've been seeing more and more articles out of CNBC, of all fucking places, regarding cryptocurrencies. And I caught this article and I wanted to talk about it just because, well, we're still talking about Bitcoin exchanges being closed down in China, or at least access to them. Anyway, here we go. Major Chinese Bitcoin conference flees to Hong Kong as government cracks down on cryptocurrencies. A major Bitcoin conference has suddenly jumped from China's capital to Hong Kong, which has greater freedoms than Beijing, in the face of a Chinese government crackdown on cryptocurrencies. The Blockchain Global Summit, hosted by BitCan, a company specializing in Bitcoin trading and services, was set for September 10th in Beijing, but it was postponed just a few days before it was set to kick off. The conference was then quickly rescheduled to begin September 20th in Hong Kong. Chinese authorities, including its central bank, early this month, banned the new issuance of digital tokens to raise money for a project or a company. China has displayed much greater mistrust of cryptocurrencies, computer-generated assets that aren't tied to a government authority, than other countries. Let's see. Much greater mistrust of cryptocurrencies than other countries. Wow, that's pretty interesting. BitCan responded to that ruling on initial coin offerings, ICOs, in explaining its decision to move the conference. Quote, "As the summit host, the event team in BitCan carefully balanced the pros and cons of the risks of Beijing's city security updates and the ICO supervision from the central bank. Though we have reported to the local enforcement and there will be no ICO-related contents on the summit, we decided to change the time and location of the summit to lower the risks of being cancelled," a notice on BitCan's website said. The company added that, quote, "most of the people scheduled to give lectures and speeches at the event would be able to attend the new Hong Kong version." Big names scheduled to attend include Jihan Wu, CEO of Bitcoin mining giant Bitmain, Roger Ver, a prominent cryptocurrency evangelist and CEO of Bitcoin.com, and technologist John McAfee. My apologies. The summit location isn't the only change BitCan has made recently. The Chinese company was blamed for a recent dip in Bitcoin's price after it announced it would halt some Bitcoin trading services. That's not their fault. Chinese regulators have been ramping up their crackdown on cryptocurrency businesses. Domestic financial media outlet Yikai Global reported that China plans to shutter all Bitcoin exchanges by month's end. Oh, please do. That report came nearly 2 weeks after Chinese regulators banned fundraising through initial coin offerings. BTC China, another one of the biggest exchanges in the country, has said it will stop all trading by September 30th. Beijing has steadily increased its influence in Hong Kong in recent years, but doesn't yet control it to the extent that it rules the mainland. Interesting. And so that was by Everett Rosenfeld. I'm assuming Everett, penis. Anyway, interesting. I don't really expect this quote-unquote Chinese crackdown to really happen. I expect that they will see the drop-off in interest in trading within their borders, and they will see the reciprocal loss in funds coming into their borders from outside of their borders, and they will say, maybe that wasn't such a good idea. Maybe we should just kind of rescind that and step back and kind of let things go. Really, China, if you were wanting to do this whole BRICS thing, that's the way to do it. Get it on cryptocurrencies. Work between your partners in cryptocurrencies. Independent cryptocurrencies, because then they don't carry the cruft of your fucking nation with them. Anyway, point being that this is going to end up causing a chilling effect in China, which it already has, and people are going to move out of China, and China is going to lose out. The users aren't going to move, and as a matter of fact, we'll probably end up seeing a spike in interest in altcoins among the Chinese, because I expect that they're just going to keep doing what they were doing before. They're just going to say, nah, no, I don't think so. I don't give a fuck what the PBoC says. This is the future, and they're going to have to fucking grow up, and I'm going to continue to do what I'm doing. And I could be wrong. I'm not Chinese, so, but I would hope that some of those Chinese that have gotten involved in this space in China would want to continue on with what they were so enthusiastic with a month ago. Because, if you look at the volume of interest that they've had in ICOs and all that stuff, in cryptocurrency in general in China, there's a shit ton of interest. A shit ton of interest. Why would you fuck with it? You've got a directionless global economy looming about you, just icebergs of debt waiting to fucking crash and cause massive runs on central banks and shit. And you're looking at this gift horse in the mouth and you're saying, no, I don't want it. I'm going to let the central banks crash my economy by giving me the cheap money now. And it's really sad, dude. I mean, I know that there have been a lot of doomsayers in the past with regard to this subject, but I have to say that I really think we're hitting a few inflection points that are different this time, and a lot of them have said, it's different this time. Peter Schiff, guy's always been just like, he's always been on about it, really. And he's been calling a major crash of some sort for almost a decade now. And we saw a little bit of it in 2008. And that was a big wake-up call, because the fact of the matter is that we're running on vapors as far as a lot of the sectors of our economy are concerned. And I think the biggest thing that we should be investing in now is really design. We should be investing in educating our children to be fucking engineers, hardware engineers, software engineers, and hammering that home as a priority, even in homeschooling and shit like that. Because I really think that the economy as it's available to us to be expressed is not being fully expressed. And those kids, they're either going to be designing things themselves or contributing into the design of of things for other people. But the point being is, if they're capable of doing it themselves, if you invest in them the abilities to do things themselves now, later on you won't have to. And we could have the kind of independent and beautiful future a lot of us are looking at and seeing with regard to cryptocurrencies. Now, one thing that they do allow for is a vast expansion of our economy. But I think the more that we see governments and companies like banks and whatnot trying to sequester certain parts of the market to just themselves, that the more they're going to cut themselves off from the greater ecology as a whole. And that's not really a good place to be. I mean, because this technology isn't going to go away. It's like operating systems. Operating systems didn't stop at Windows 3.1, obviously. Although some would argue with that. Some would say it was a far more stable operating system than the average commercially available one now. And I might agree with them on that, really. They were certainly more secure and less apt to give away our personal identity information and all that other bullshit. But that's because it didn't collect that shit as a requirement for utilization. You didn't have to sell your children to the seventh son of the seventh son of the seventh son just to past the end user license agreement. Anyway, let's go ahead and throw back down into some music. I'm feeling the need. And then we'll get back into some articles. And as far as what to play, I'm hearing Meshuggah in the background, and I have not been playing any Meshuggah today, so I think it would be appropriate. I like Clockworks. Fuck. What exactly to pick, though? That's the thing. I like Swarm. Fuck it. Here we go. Swarm. Meshuggah. Here on Coin Metal. And that was Prong with Windows Shut. And I got an interesting little article here. And this one is on medium.com. Cryptocurrency system is at risk. The W3C Web Payments Working Group has hit a major milestone. The Payment Request API has progressed to candidate recommendation. That means we have a few months to use the API and test interoperability between different browsers before it becomes a proposed recommendation and is future frozen. The deadline for comments for candidate recommendation is 31st of October 2017. Another aspect of the CR stage in the W3C process is that experimental features included in the specification are marked, quote, as at risk. This indicates that when the specification exits CR, the WG must decide if there has been sufficient demand for the feature to justify keeping it. What is currency system? All amounts in the Payment Request API are expressed as Payment Currency Amount Dictionary, which has a member currency system that specifies the currency system that is in use. By default, this is the ISO 4217 set of currencies, the ones we are all familiar with, like USD, or my native ZAR, and that's South African Rand. Specifying the currency of a payment request is not only essential for processing, obviously, but is used extensively by browsers to render appropriate user interface. As a result, if a website creates a payment request that amounts from an unknown currency system, the browser is unable to pretty up the UI for that currency. Why is currency system at risk? Browsers like to validate input, especially if that input affects the UI they render to their users. If you read the thread on issue 490, you'll get some context on this from the spec editors. Allowing a website to request payments in an obscure currency, like airline miles or cryptocurrency, is a UI and security challenge with a lot of questions. How long is a valid non-ISO 4217 currency code? How long is a valid okay. And not so many answers without detailed use cases from the affected developer communities. 5 years ago, this feature may have been dropped by the standards process unquestioned, and it still might. But as Michael Castillo has pointed out recently, the new browser APIs open the door for an exciting new world of payment methods like Interledger Protocol and new currencies like Bitcoin, Ether, and XRP. Without the ability to express amounts in alternative currencies, the use cases for the new browser APIs are seriously curtailed. What about the three character alpha non-ISO 4217 codes? Strictly speaking, an implementation of the current specification will accept any three-letter currency code. The specification says, when using ISO 4217, all well-formed three-letter alpha codes are allowed, i.e. numeric codes are not supported. Their canonical form is uppercase. However, the set of combinations of currency code for which localized currency symbols are available is implementation dependent. Where a local currency symbol is not available, a user agent should use U plus 00A4 for formatting. This begs the question though. What's the correct code for Bitcoin? Is it BTC, the de facto standard, or XBT, the more correct but less used alternative code? The ISO 4217 system uses a two-letter alpha country code as the first two letters of all currency codes, and on that basis, BTC is a non-existent currency from Bhutan. It would be quite confusing if the Bhutan flag appeared next to a Bitcoin payment because Bitcoin is mistakenly interpreted as an ISO 4217 code. Some cryptocurrencies like Ripple have stuck to the ISO 4217 convention for supranational currencies, while others like Zcash have considered it but chose to ignore it. At the time of writing, only 3 of the top 10 cryptocurrencies by market capitalization. Oh, Jesus Christ, man. Got the yawns bad. At the time of writing, only 3 of the 10 top cryptocurrencies by market capitalization followed the ISO 4217 rules. Even worse, 2 of the listed currencies don't even use 3-letter codes, Dash and Miota. The risk of squatting on legitimate codes was raised early on by Adam Roach from Mozilla, who proposed the current currency system solution. There's a lot of history behind the current design. The issue then is, what is stopping the current flurry of ICOs from quickly squatting on all remaining 3-letter alpha codes that start with legitimate country codes? It's like the gold rush for 3-letter domain names all over again. As I think this illustrates, simply using ISO 4217 stock codes and hoping for the best is probably not a good solution, and this doesn't even address the non-crypto use cases like airline miles, loyalty points, or many other non-money currencies we use every day. Without currency system or something like it, the developer community is in for a big headache. Admittedly, support for currency systems simply shifts that burden to the browsers, but that's long been the preference for any W3C standard that has wide support. What can you do next? If you have a use case for non-traditional currencies, then the working group wants to hear from you before the 31st of October. If it's a short comment to add to the discussion, put it on issue 617, or if you have a specific use case you'd like the group to consider, log a new issue. Even better would be to write a demonstration of your use case in the form of a demo website or test case for our test suite. For help on writing tests, see the test repo. Interesting. So, don't know. I can see the issue, but how it will pertain to cryptocurrencies, I don't see that it needs to. I mean, because you don't need to create a separate standard for cryptocurrencies. I don't understand the problem with regard to cryptocurrencies. I mean, it's not like they're something that are so insular that you can't find an immediate valuation of them in one of several other currencies. You know, so like if you wanted to convert it to like Ethereum, or, you know, convert your Ethereum to Litecoin or something like that, you can go to an exchange, or hopefully someday some sort of decentralized exchange application or something to that effect, and just get it, you know, swap it with somebody who's got the other coin that you want. You know, now I don't understand why it has to be factored into my browser. I mean, you've already got your wallet app, you know, so when it comes to transacting in cryptocurrencies, all the vendor has to provide you with is a wallet address. You know, it doesn't have to be the same wallet address every single time, but that's all that's really needed. It's not something where you have to change the language that the UI displays in or something like that. And as far as exchange rates, I wouldn't trust that to my browser to assess anyway. I mean, you know, if I'm not online, I'm probably not going to be transacting in cryptocurrencies, for one. You know, but for another thing though, I mean, my browser, like I said, it doesn't need to change depending on the currency that I'm using. So, yeah, I don't see that this has a whole lot of concern for us in cryptocurrencies, and they're being concerned about it. Okay, whatever, but I don't see it as being like some sort of fatal flaw or something that has to be addressed or we're all gonna fucking die. You know, it's not that big a thing. Oh, geez. And I don't know if you noticed this. I saw this this other article here. It's got Max Kaiser in it, of all people. Now, if you've been involved in cryptocurrencies for a little while, you probably know how long Max Kaiser has been involved in cryptocurrencies. I mean, I would say since probably 2011, 2012. I remember that one of the first exchange accounts that I set up was on Max's exchange, although as I recall, it went defunct. And he also had a coin of his own, and I guess he's considering the possibility of rebranding it and relaunching it or something like that. But anyway, I came across this article. I wanted to go ahead and read it here. This is on, newsbtc.com. Max Kaiser on Bitcoin price hitting 6,000 as it recovers from China ban. And this is written on September 18th, 2017 by Joseph Young. And although there is not a picture, I'm going to assume that Joseph is a man. And so yes, he does have a penis. So let's inflate this just a teeny tiny. Alright, there we go. So, as we were saying, earlier today on September 18th, prominent financial analyst and RT's Kaiser Report host Max Kaiser expressed his optimism in regard to Bitcoin's short-term price trend, as after reaffirming his interim target of $10,000, Kaiser noted that it is likely for Bitcoin price to hit $6,000 by the end of 2017, Recent bans on initial coin offerings and nationwide suppression of Bitcoin exchanges imposed by the Chinese government and its financial regulators led to a minor correction on the entire cryptocurrency market. However, almost immediately after the closure of Chinese Bitcoin exchanges were finalized, the global Bitcoin exchange market recovered as Bitcoin price surpassed the $4,000 mark yet again. September has been an interesting month for Bitcoin in general in terms of scalability and growth. The rapid rate of integration of the Bitcoin core development team's transaction malleability and scaling solution significantly reduced transaction fees of Bitcoin by reducing the average block size and the size of the Bitcoin mempool. It did no such thing. In addition to efficient scaling, an increasing number of financial institutions, institutional investors, and large-scale investors have embraced Bitcoin as a safe haven asset and digital currency. In consideration of the above-mentioned optimism surrounding Bitcoin and the migration of traders from China to Japan, it is fair to justify upward momentum for Bitcoin moving forward. As traders move from the Chinese market to the Japanese Bitcoin exchange market, and more exchanges in Japan receive licenses to operate within the country, Japan will evolve into a powerhouse within the global Bitcoin market. Already, Japan has overtaken the US to become the world's largest Bitcoin exchange market. Through efficient regulations and venture capital investment, Japanese Bitcoin exchanges will continue to grow at a rapid rate. In the short term, the ban on exchanges imposed by the Chinese government could have affected Bitcoin negatively. However, as billionaire investor Tim Draper explained, the exit of the Chinese Bitcoin exchange market could prove to be beneficial in the long term. Quote, "The dead wood of the Bitcoin ecosystem is leaving now. Our faith in the crypto economy will be well rewarded," said Draper. It is likely that Draper described the Chinese Bitcoin industry as the dead wood of the Bitcoin ecosystem, not because of the lack of competent companies and service providers, but due to the way competent companies were punished unfairly by local financial regulators. Since November, Chinese exchanges including BTCC, OKCoin, and Huobi have closely cooperated with the People's Bank of China and local authorities to establish better standards for the Bitcoin industry and to provide a more stable exchange market for users. Instead of rewarding the efforts of local companies, the Chinese government punished them with an unforeseen ban, which the companies were not aware of until a week before the notice. Global markets have already been stabilizing after the 2-week-long slump caused by the controversial ban on Chinese exchanges. The exit of the Chinese market had only strengthened the Japanese and South Korean markets, which are growing at a rapid rate with practical regulatory frameworks developed by their governments. Yeah, whatever. That was to be expected. We're seeing the same thing in the United States. We're starting to see an additional interest in those flyover states by a lot of tech companies and a lot of tech startups, where they're looking at those flyover states and saying, gosh, there's a lot of people there, that aren't doing anything. Maybe we can put them to work, put them behind a computer screen and get them cranking out code or something, and I expect that trend to continue as well, by the way. But yeah, so this is all, and I was saying that as a result of the New York and now Washington and a few other states, their state regulations are just too fucking onerous for most of the people in cryptocurrencies to bother complying with. I mean, you would literally go broke if you tried to set up shop in Washington state and you weren't already worth billions of dollars. You will probably go broke. You will probably get wrecked in that state trying to abide by their compliance regulations. It's onerous and undue. And honestly, it'll just exclude them from being a center of growth in this new economy. That's all there is to it. Anyway, let's go ahead and throw down a little bit of music. I want to throw down some Rammstein here. Du Hast here on Coin Metal. And that was Anthrax with Out of Sight, Out of Mind off of State of Euphoria. It's really funny. I've had that album like for a million years, but for whatever reason, I just never bought it in CD. I don't know. I guess it was one of those things where I figured I had it in tape, so, you know, that's all I needed, right? You know? The future wasn't going to happen to me. I wasn't going to migrate over to CDs, but unfortunately, it happened anyway. And I haven't quite migrated on to the next iteration of media consumption, iTunes and that kind of business. I mean, I use Pandora a little bit, but I don't know. I don't really see the need to give Apple any more of my money. I've already given plenty, and they were very unappreciative of it. So, you know, hey, they're not gonna be happy with the money I'm giving them. Then I'm not gonna give them any more money. Anyway, speaking of money, I found this article here on Fortune magazine, and I'm not sure if I want to go into this one quite yet. Actually, you know what? I'm going to take a step back. I'm going to read this one from CoinDesk first. MUFG on Diamond remarks: bank cryptocurrencies have nothing to do with Bitcoin. This was written on September 18th of 2017 by Rachel Rose O'Leary. So I'm going to say no penis. A chief executive of Japanese financial giant Mitsubishi UFJ Financial Group, MUFG, is seeking to differentiate a blockchain project his bank is involved with from Bitcoin, following notable comments last week from JP Morgan's Jamie Dimon. In a new interview with CNBC, MUFG CEO Nobuyuki Hirano responded to questioning about the JP Morgan chief executive's remarks, which made the headlines after he branded Bitcoin, quote, a fraud, and saying it won't end well. Notably, Hirano stressed in the interview that, quote, there are different types of digital currencies, including one that forms part of a, quote, blockchain-based settlement system that MUFG and other financial institutions are developing. In short, the digital currency probably Jamie blamed as fraud is public digital currency, he told the outlet. Hirano went on to emphasize that unlike public cryptocurrencies such as Bitcoin, private digital currencies are regulated and controlled, arguing, quote, it's a kind of interbank money or securities settlement clearing method, so it has nothing to do with Bitcoin or other type, or that there's that currencies which does not have any controlling arm, which has a huge volatility every day, and which is not really with the money laundering and other problems. Dude's English is broken. The MUFG CEO concluded that by applying blockchain to the payments and settlement process, the bank hopes to make every operation more efficient. The institution has been working on digital currency concepts for some time, including an internal MUFG coin, which sought to replicate aspects of other digital currency, but without Bitcoin's energy-intensive mining process. Oh God, these fucking people. What is it with you and your fucking private blockchains? You're not going to stop it from being fucking fucked with. You people cannot stop one another from robbing one another. It's like commercial fishermen. They're thieves by trade. Or trade, rather. Oh man, this is funny. Apparently they've been developing their own cryptocurrency since at least February 1st of 2016, because I'm looking at an article here for Japan's largest bank, latest to develop own digital currency. You know, these are really fun for your internal bullshit, okay? As soon as you start exposing them to the outside world, that's where things get slippery, okay? Now, doing your shit behind the scenes and whatnot, you're probably using Ripple, by the way, and thinking that you're being slick by not telling everybody that that's exactly what you're doing, but I would wager that is exactly what you're doing. And I don't really care. I mean, it's not that bad. They're still in existence. Which honestly, I really didn't anticipate being true this late in the game. I expected that Ripple would have gone bust a little while ago with everybody trying to rip one another off, but apparently they're delaying that until the lawsuit phase, which, from what I understand, is kind of beginning. But I don't know. We'll see. You know, it's a wait and see kind of thing. Anyway, so Japan. They're one of their big banks, I guess, thinks that they're going to make a digital currency for themselves. I don't see this as working very well. I mean, I think that in this we still see the same problem that we came to cryptocurrencies to get away from, is the idea of trust. You know, they trust that their shit works because it's all just working internally, right? There's still plenty of opportunity for waste, fraud, and abuse. They didn't even start talking about doing this shit until after the quote-unquote the invention of the immutable blockchain. You know, so that tells me that they plan to be doing that in the background. But the whole purpose of having miners is it's not just a security feature, which it is, but it's a security feature that verifies the validity of the state of the chain, you know. And because it's from multiple sources, multiple independent sources, or at least sources independent of one another, this is what gives us the reflection of consensus that gives the blockchain its validity. However, if you're doing it all internally, there's no contrast. There's no, I mean, I guess you could consider your independent nodes on your network to be somewhat reminiscent of Bitcoin, in that they will be independent physically of one another, but they'll probably be dependent on in other ways, such as what software they're running, what blockchain they're on. You know, and again, if there's any exposure to the open market, you can forget about solvency. That shit will go insolvent. Forget about it. Forget about it. Anyway, getting on from Japan, I saw this article, and this one made me really wonder about whether or not it might have something to do with this whole business of banning Bitcoin exchanges in China, or shutting them down rather. It's just a suspicion, but there could be something to it. It's a global market out there. Anyway, here it is. Trump unwise to block Chinese chip maker deal, Xinhua says. And let's see, this is on South China Morning Post. Commentary. Let's see here. And this is by Sidney Lang. Clearly, penis. And it was authored on Saturday, 16th September 2017, 6:11 p.m. It was unwise for U.S. President Donald Trump to stop a Chinese firm from acquiring an American semiconductor company this week, according to official news agency Xinhua, I guess. The state news outlet said in a commentary on Saturday that, quote, Chinese investment is not a Trojan horse, and that Trump's decision to block a deal was, quote, penny wise and pound foolish. It did not directly name the deal. Trump issued an order on Wednesday to stop a $1.3 billion takeover of Portland-based Lattice Semiconductor by Canyon Bridge Capital Partners, a private equity firm backed by Chinese venture capital fund, on the grounds that it was a national security risk. Quote, security reviews of investments in sensitive sectors are the legitimate rights of all countries, but that power should not be used as a tool to implement protectionism, Xinhua said. The U.S. government has been sensitive to Chinese acquisitions in recent years, particularly sectors in the high-tech industry, such as telecoms and chip makers, that it deems critical to national security. Trump, who has been vocal about what he considers China's unfair trade practices, has also initiated an investigation into forced technology transfers from U.S. companies when they invest in China. Lattice and Canyon Bridge appealed to Trump after failing 3 times to get approval for the takeover from the Committee on Foreign Investment in the United States, or CFIUS, which scrutinizes such deals. The commentary went on to criticize Trump's decision as a bid to win more votes in next year's midterm elections. Quote, as a matter of fact, however, such a move is penny-wise and pound-foolish, it said. It is unusual for a U.S. president to directly shut down a business deal over national security concerns. Trump's was just the 4th such order in the past 25 years. Chinese investment is not a Trojan horse with hidden purposes, Xinhua said. Quote, as for this issue, it is in the interest of the United States itself to focus on the bigger picture and have a long-term vision instead of being preoccupied by immediate interests. Oh, you mean like World War III? Yeah. Little thing like that. The commentary also suggests that Trump's hostility towards Chinese investment could overshadow his planned China trip. With President Trump set to pay a visit to China later this year, the two countries need to strengthen dialogue and communication, promote cooperation and exchanges in various fields, and properly handle issues of common concern. Only then can China and the United States push forward the world's most important bilateral relationship, it said. Yeah. Yeah. So anyway, with regard to that, you gotta wonder if that has any kind of impact on this whole Bitcoin banning thing. They see it as maybe a way to hurt us or something, or hurt the U.S.? I don't know. Maybe they're that petty. Maybe they're the ones that are that short-sighted on this whole thing. I could be wrong. I've been wrong before. It's happened. Anyway, I did kind of preface this article here. This is on Fortune, and I know I'm just kind of breezing through it, but in all honesty, the level of stuff that's out there right now is kind of ho hum. It seems like there's been a lot of shut up, a lot of chilling in the cryptosphere about new projects and whatnot. A lot of uncertainty going on right now, and that's to be expected. The PBoC just kind of flailed around the ban hammer without really being specific about what they're banning and what the criteria for whether or not something will be banned will be. And so, yeah, as such, people are a little bit leery. It's to be expected. Anyway, this one is on Fortune magazine. 5 big Bitcoin crashes. What we learned. And this was written by Jeff John Roberts. September has been a wild ride for Bitcoin owners. The digital currency began the month nudging an all-time high of $5,000 before losing nearly 40% of its value in a spectacular crash. Now a recovery has seen Bitcoin pop back up over $4,000 as of Monday morning. To put this in context, Fortune offers a closer look at this month's crash and 4 other major price shocks, as well as likely explanations for all of them. Taken together, this account can provide some insight into why Bitcoin is so volatile and whether it can survive in the long run. The data is from the Winklevoss Index, which blends prices from different exchanges. Note this survey doesn't include crashes from the early days of Bitcoin, which journalist Tim Lee recounts here and gives another link. The meltdown of April 2013. What happened in the spring of 2013? A ghastly collapse saw the price of Bitcoin fall from $233 to $67 overnight. That's a 71% drop. It would take 7 months to recover. Why it happened? The crash of April 2013 came after Bitcoin's first big brush with the mainstream. The currency had never crossed $15 before 2013, but a flood of media coverage helped drive it well above $200. The crash, which followed 2 smaller jolts in March, reflected in part a correction to spectator exuberance. Some also attribute it to an outage at Mt. Gox, the most popular at the time exchange for buying and selling Bitcoin. Pop goes the first 2013 bubble. What happened? Bitcoin spent most of the rest of 2013 around $120. Then prices jumped tenfold in the fall. Bitcoin hit a high of $1,150 in late November, and then the party ended abruptly, and prices tumbled to below $500 by mid-December. It would take more than 4 years for Bitcoin to reach $1,000 again. Why it happened? The crazy price run-up of late 2013 appears to have been a classic bubble as amateur investors rushed into Bitcoin for the first time. The frenzy was helped by regulators taking a more positive view of Bitcoin. In the early years, most regarded it as criminal, if they had heard of it at all, and by U.S. exchanges like Coinbase that made it easier for average people to buy Bitcoin. When the bubble popped, prices would likely have recovered more quickly but for what happened next. The Mt. Gox calamity of 2014. What happened? The price of Bitcoin had been making big gains after the bubble pop of 2013 when, in February, the price fell from $867 to $439, a 49% drop. This triggered a doldrums period for Bitcoin that lasted until late 2016. Why it happened? The February crash happened after the operator of Mt. Gox, long the go-to trading place for longtime Bitcoin owners, announced the exchange had been hacked. On February 7th, the exchange halted withdrawals and later revealed thieves had made off with 850,000 Bitcoins, which would be worth around $3.5 billion today. The incident, which created existential doubts about the security of Bitcoin and undercut liquidity in the currency, likely harmed the currency value for years. Summer sell-off of 2017. What happened? Fast forward to the go-go days of 2017. In early January, Bitcoin broke $1,000 for the first time in years and started climbing like crazy. By June, the currency nudged $3,000, but then lurched back all of a sudden, falling 36% to $1,869 by mid-July. Why it happened? Even as Bitcoin boomed anew, many worried something was wrong with the code under the hood. Specifically, Bitcoin was slow compared to other cryptocurrencies like Litecoin and Ethereum, and its core developers couldn't come to an agreement on how to update the software. This raised the prospect of a quote fork, which would produce two versions of Bitcoin's canonical blockchain, and future schisms, which in turn appeared to give rise to market jitters and the big fall in price. Ironically, such a fork did materialize in August in the form of rival Bitcoin Cash, but this seems to have done no long-term harm to Bitcoin. The Great China Chill. What happened? After fears over the fork subsided, Bitcoin went on another crazy tear. It climbed close to $5,000 at the start of September before plunging 37% by September 13th, shaving off over $30 billion from Bitcoin's total market cap in the process. A recovery is already underway, though, as prices climbed above $4,000. Oh, shit. Climbed above $4,000 3 days later. Why it happened? While Bitcoin price moves can be inscrutable, the prime reason for the latest crash can be summed up in one word: China. After it cracked down on so-called initial coin offerings, there have been widespread rumors that the communist government is going to ban trading cryptocurrency altogether. In response, the most prominent exchange, BTC China, said it will end trading this month. This crackdown, combined with questions about China's de facto monopoly on Bitcoin mining, explains the recent price swoon. Lessons learned from 5 crashes. A look back at Bitcoin price swings in the past 5 years, which includes several stomach-churning tumbles of 40 and even 50%, makes it clear that the world's most popular cryptocurrency was and is extremely volatile. It's also apparent that most of the Bitcoin crashes coincide with speculative run-ups coupled with exogenous shocks such as a major hack or government crackdown. Also, in most cases, Bitcoin has bounced back from the crashes in months or even weeks, suggesting nervous Bitcoin buyers will be okay if they are holding for the long run. On the other hand, the crashes of late 2013 and early 2014 are a cautionary tale. Recall it took years for those who bought Bitcoin at 1,000 to see their investment recover. As for whether Bitcoin could fall all the way to $5, note how Lee, who wrote an earlier history of Bitcoin crashes, said in 2013, "It's simply too early to tell." Today, the cryptocurrency market is so much bigger and has proved so resilient, it appears a safe bet that Bitcoin's floor price will always be well above $5. The question now for investors is to choose a narrative that explains Bitcoin's long-term place in the world. Should they take the view Bitcoin is nothing more than a niche, or in Jamie Dimon's view, a modern-day version of tulip bulbs? If so, they can short it. Or should they take the view espoused by Bloomberg View columnist Mohammed El-Erian that Bitcoin and other crypto assets are now a permanent part of the investment landscape and will have a role alongside precious metals as long-term stores of value? Either outcome seems plausible, and so does a future crash. Yeah, whatever. I expect corrections, but a crash, no. And all this business about it going down to $5, let me put it to you this way. I don't give a fuck of you, how many of you sell your fucking Bitcoin. I'm not going to sell my fucking Bitcoin. And if it does come to selling my Bitcoin and I'm the last motherfucker on earth that has any Bitcoin, I'm not going to sell it for $5. So you can just take that price and stuff it clean up your ass. Because as long as there's some in circulation, it'll never get to that price. Anyway, let's go ahead and throw down a little bit of music. Just a short little music break here. And then we'll go ahead and round out the episode. And as far as what to play, it's got to be body count. No lives matter here on Coin Metal. And that was 9 Inch Nails with Closer. Yeah, somebody mentioned that they wanted to hear some old school 9 Inch Nails, and so I could not refuse. Had to do it. Anyway, we are coming down toward the very, very end, and I caught this article. I want to throw it down really quick because we got about that much time. Anyway, here it is. This one is on the Sydney Morning Herald. My apologies. It was in some weird Gothic script, so actually I had to translate it into something discernible first. Anyway, continuing. And this is written by Jessica Sire, and I'm assuming no penis. Bitcoin is beyond government control. Bitcoin has surged more than 33% from Friday's wave of panic selling, suggesting the cryptocurrency is becoming more and more immune to government intervention. After news broke that Chinese regulators were shutting down all exchanges on the mainland, the price of the world's most valuable cryptocurrency plummeted over 40% and dragged the price to a low of $2,981 US. There we go. Citing the lack of licensing and regulation, authorities gave the major exchanges operating in China 10 days to close their doors. As of Friday, the last exchange ceased trading and Bitcoin sustained heavy selling. However, over the weekend, exchanges throughout the rest of the world picked up the slack and voracious demand returned, sending the price back above US $4,000 a coin before slipping slightly on Tuesday morning. There are always those waiting in the wings to buy Bitcoin whenever there is a price dip, said Duncan Campbell, director of digital currency experts and education consultancy. Not because they're interested in trading it, but because they feel it is seriously undervalued in the long term. The long-term believers in Bitcoin see the decentralized network as a potential solution to the inefficiencies purported by global central banks, which can print as much currency as they like, whereas Bitcoin is restrained by a 21 million coin cap. There are currently 14 million Bitcoin in circulation, mined by computers solving complex algorithms. But as software stands, there can only ever be 21 million in circulation. That's because there can only ever be 21 million Bitcoin. Bitcoin has shown its resilience to government's intervention several times in the last 12 months, especially as the cryptocurrency weans itself of Chinese dependence. There was a time when Chinese Bitcoin trading accounted for 90% of global volume, largely as investors used it as a mechanism to move money out of the country, and the world's largest miners were situated there. But much of that Chinese volume was reduced in January after authorities banned no-fee trading, and exchanges in Japan and Korea absorbed that trading capacity. Thanks to this more diversified market, it stands to reason that the regulatory interventions of a single country, even the world's most populous country, should have less impact on the Bitcoin price over the long term, writes Mark Hochstein, managing editor for CoinDesk and former editor-in-chief of American Banker. However, for every long-term believer in the price, there are several speculative traders hoping to cash in on the digital currency boom. That the price of Bitcoin has soared almost... Oh, wow. I've got a very short period of time here left. Let's see. That the price of Bitcoin has soared almost 600% in just 12 months and has recovered so quickly after every price setback is a tantalizing bet for those hoping to get rich quickly. There are many signals in the crypto space that suggest that Bitcoin is increasingly identified by the general population as an investment opportunity, says Chris Mountford, software engineer at Digital Asset. My concern is that many of these people are so new to this market, they have not experienced the downside risk of the high volatility of the Bitcoin price. Speculative traders have flooded into the Bitcoin market hoping to gain access to one of the hundreds of speculative tokens now offered via initial coin offerings. ICOs are crowd-funded projects where tokens are issued in exchange for access to a new network designed for hundreds of different reasons. However, despite the cowboy-like behavior in Bitcoin secondary markets, the underlying demand for Bitcoin itself looks to have solidified. A few years ago, it was mostly ideologists and nerds using Bitcoin, says Daniel Alexievic, chief executive of Living Room of Satoshi, a Brisbane-based company that allows bill payment in Bitcoin. But now more and more people are using it as an exit from the current banking system. That is a very widespread appeal. And it is not an appeal that is going to go away anytime soon, and it is with that I want to go ahead and close out this episode. And as usual, it is always a pleasure to have listeners and support and all that. I certainly do appreciate it. And you will be able to find this episode up on my YouTube channel. So far, I have actually managed to record it, so we're all good there. Anyway, I ought to have this up either tonight or tomorrow. And we will be back again on Wednesday at 8 p.m. Pacific Standard Time. So until then, I want y'all to trade safe, do your homework, and watch out for your own bunghole, because nobody else is going to do it for you. And as far as an exit song, a final dance, I'm thinking maybe something short and sweet from System of a Down. We haven't played enough of that tonight. And so fuck it, bounce here on Coin Metal. Thanks again for listening, and y'all have an excellent evening.